Yeah, hello friends, this is Alan Josh and I hope you're doing fine. So today I'm going to be sharing with you some other factors that I do consider in my research on cryptocurrency that I believe your consideration is going to be of help to you. You know, a lot of times people get so consumed with what happens on the chart and they forget some of the things that happen behind the scene, and you are at a better position when you're able to combine the things that happen on the chart with what happens behind the scene, and those are the things I'm paying so much attention to help you understand right now. So before we move on, I must remind you of the fact that I'm not a financial advisor, and nothing I say here should be misconstrued for a financial advice. Everything here is solely for informational purpose, and all decisions you make is at your own discretion. So that is it about that. And before I go on to what I intend discussing today, I'm going to let's just do some recap on what has been happening in this crypto space. You know, I mentioned to you in one of the past videos that what happens in the crypto space is largely determined by what Bitcoin does, because there is a lot of emotional attachment to Bitcoin as a cryptocurrency, and I believe over time, as knowledge increases in this space, people are going to be less dependent, less emotionally driven, and more knowledge driven. And as people get more and more knowledge driven instead of being emotionally driven, there's going to be less dependence on Bitcoin as as the boss of this space. A lot of cryptocurrencies are going to decouple from Bitcoin and going to make their own move independently. But right now, Bitcoin is still the boss, and what it does affects what happens in the space. So we saw 2 days ago when Bitcoin has this major move downwards, as though it was going to break this rising wedge on the daily time frame. There's it's on a rising wedge right now, not so perfect a wedge, but 2 days ago it made this move, this significant move downwards, at least significant in the eyes of most people, especially most retail traders. And then we saw red all over, all odds bowed. Immediately Bitcoin made this move. It was as if it was going to break this rising wedge, and then we saw that it bounced off this lower side of it, and it looks like it's making a move upwards, which is encouraging. But until Bitcoin actually breaks this consolidation point and I see a green candle above this point, I won't be as comfortable as that. There's still the likelihood of breaking down this rising wedge. But when you take this chart to the weekly, there's also something also encouraging. We saw the last week, which was a bullish candle, not so perfect a bullish engulfer. It engulfed the previous candle. It didn't totally engulf it. We saw this this long wick down, which makes this engulfer not so much of a perfect one, but this is still a bullish pattern. I mean, the last week closed as a bullish candle that almost engulfed the previous one. I mostly consider my engulfing as engulfing the whole body of the previous candle. So it didn't engulf the whole body, but it's still something so encouraging. This is a signal for an upward movement, and we saw this week there was a pullback, and then we are going back up, and this is a healthy move, sincerely speaking. So combining that with what is happening on the daily, actually there's enough reason to believe that we are headed up. Okay, and we are still in a bullish market. I believe the bullish run is still quite, it's not fading out. It's still going to extend for much longer than this, and that is my opinion. And but until I see these rising above here, then I won't be so comfortable. But now I'm still holding my odds. And like I told you when I shared in, I think, one of the first videos, I said when Bitcoin is about to break a recent high or an all-time high, there's often panic in this space. So when it's breaking this all-time high, which is still quite recent, we expect that odds should actually crash based on that mindset. But I believe that, emotionally speaking, a lot of people have become so used to 60k or 62k to some extent. So breaking this recent high may not have that much of a significance because people are getting so used to seeing Bitcoin around 60k and the likes. But personally, when it's about breaking this high here, I'm going to take out some major profits from my odds and wait for what happens afterwards. If it's rejected, I expect odds to take a bow, and if it climbs higher, normally odds should also take a bow. But like I said, people are getting used to this region, so it might not have that significant effect, but no, there's no guarantee. So I'm still going to follow my perception of what Bitcoin does based on past records. So it's breaking an all-time high. I'm taking a major portion of my profit from odds and waiting for what happens before I get back in. And I must remind you, never go all in and never go all out. We are still in a bullish market, but try to manage your risk. I prefer the dollar cost averaging model to taking trades, and that's what I do. So I'm going to take out some of my profits when I see Bitcoin about to break this high. I already took some when I saw this pattern, and then I got back in when I saw this pattern, and then it's been profitable. But right now I'm waiting to see if it's about, when it's about breaking this all-time high, I'm taking some profits out and waiting some more to see what happens before I consider going back in. So that is what is happening with Bitcoin right now. And then we can see, so going back to what I intend sharing with you today is the concept of the economics of a token. Some people call it tokenomics. Okay, so I prefer to just say the economics of a token. And that's one of the major things you should understand as a crypto researcher. Okay, and a very, very important formula you should have in mind when researching a cryptocurrency is this formula of, this is a very important formula, like I stated here. The market cap is equal to current price times the circulating supply. This is a formula that is used not just in the crypto space, it's applicable in the financial space. And when they do the calculation of, say, the market cap of Amazon, for example, is just the current price of each of the shares multiplied by all the outstanding shares of that particular company. So, but I prefer using circulating supply in the case of a crypto because that's what we often get to use in this space, circulating supply. Okay, and then market cap is simply how much money has flown into the space. I mean, how much the value of the funds that have flowed into the projects over time. So, but then I prefer to rearrange this formula when making my judgments in crypto to make the current price the subjects. I can't remember what we call it in mathematics, but maybe subject of the equation, or that looks like combining English with mathematics. But bringing the current market price as the subject here and then defining the formula relative to this, I prefer stating this as this second option, which is current price is equal to market cap divided by the circulating supply. So the algorithm that determines the price of every crypto entity simply divides the market cap by the circulating supply. So if you divide this market cap of Bitcoin, for example, by the circulating supply, you should get approximately this value. If you divide this market cap by the circulating supply, I mean for Ethereum, the market cap here by the circulating supply, you should get approximately this value. So I want to just try it out. Let's try with Ethereum, for example. Let's do some calculations with Ethereum. So Ethereum presently has a market cap of 241 rather 41 billion 107 million 872 then 706 divided by the circulating supply of 115,395 then 369. So we should be having about 2089. And what do we have here? We have about 2086. So that should be with approximation. So approximately we get this value, and that's how you can try with any other coin. Divide the market cap by the circulating supply, and then you get a price. I'm going to explain to you the significance of this very, very shortly. So the market cap simply is how much fund has flown into a particular project or a particular company over time, and then the value of all the funds that has flown. So when now $1 trillion has flown into Bitcoin divided by circulating supply, you get this particular value. So when you're trying to make your research and make your decision on whether or not to invest in any cryptocurrency, you want to consider if there is any factor that can lead to an increment in the market cap. If you are using this value, for example, based on this formula I showed earlier. So if you are making your projection on what the current price is going to be based on future projections, so you want to consider, is there any factor that is going to increase the numerator here, which is market cap, or is there any factor that is going to reduce the numerator, which is the circulating supply? And any factor that increases this market cap or reduces this circulating supply is going to increase the current price. And that is why recently we have crypto.com token, which is CRO. For example, they burned some of their tokens that were in circulation. And when they burn the token, even without, for example, if you burn some of the quantity in circulation and then the circulating supply is reduced, even with the constant market cap, you should expect it to increase the current price of that commodity. Okay, so even at a constant market capitalization, if there's anything that reduces the supply of a particular token or cryptocurrency, is going to increase the current market price. And there are some tokens or cryptocurrencies that have deflationary plans. For example, they have some plans that ensure that certain amount or certain some irregular amounts are sucked out of circulation over time based on their plan. You can do that. When you do your research, you may be able to get to know this. So whatever increases the market cap or reduces the circulating supply is going to increase the current market price. So we see the case of reduction in circulating supply with CRO recently, that's crypto.com token, and then the case of increment in the market cap. That's why when you hear in the news that maybe Bitcoin is hitting a market cap of 1 trillion or more, increase in market cap means increase in price. That's what it means. As more funds flow into the space, you have the price of that commodity actually increasing. Now, I don't want to go ahead of myself, but no problem. We're going to get to the implications of this, the practical implications of this very shortly. So we have another thing you should realize. Okay, I mentioned that the circulating supply and the market cap are the major factor that determines the price of a commodity. And as far as that is concerned, one thing you want to pay attention to is the total amount of token we have in circulation. Is this there are some tokens that have what we call hard cap, some have soft cap. Hard cap tokens are tokens like Theta, for example. Theta token. Theta here, I explained what Theta does when I was explaining use case in there. So Theta here has a maximum cap of 1 billion units, and based on their plan, they are not planning to ever add more into circulation. So it has a maximum supply of 1 billion, total supply of 1 billion, maximum supply of 1 billion. So it has a hard cap in the sense that the maximum cap is defined. Bitcoin has a hard cap of 20 million units, so it is defined. But there are some other tokens or cryptocurrencies that don't have a hard cap, like Ethereum. Ethereum, for example, doesn't have a maximum supply. There is a plan on how to put more in circulation over time. So hard cap is some. I'm mostly interested in a project that has a hard cap, but that's not so much of a problem. Even if there's a project that has unlimited supply, if there's a plan on how to put more in circulation, and that plan does not, that vesting plan, like it is called, doesn't involve putting too much in circulation over time, because you know that if more tokens are brought into circulation suddenly, if more tokens are brought into circulation suddenly, is going to cause the price of that particular token to crash. You remember the formula I mentioned to you. The current price is equal to the market cap divided by circulating supply. So whatever plan that leads to more token brought into circulation is going to crash the price of the commodities. Take, for example, Doge. One of the issues with Dogecoin, for example, as high as it is because there are a lot of people who are holding this coin in their wallets. A lot of wheels who are holding this coin, and then it's not in circulation, but immediately there's a hype and the price increase, they come and dump more into circulation just to cash out, and then they dump the price of the commodity. They dump the price of that commodity and as they put more in circulation, it leads to the price of the commodity tanking. So understanding the formula that the current price is equal to the market cap divided by the circulating supply, you want to ask yourself, what's the current market cap of this coin or this token, and what is the circulating supply? Because when the market cap is already very, very high, take for example, I think the network is quite bad now. So in essence, what's the current market cap, and then what's the current circulating supply? What's the total supply relative to the circulating supply? Is everything is the total supply in circulation already, or there are some kept somewhere? If some are kept somewhere, or some are pre-mined or kept somewhere and to be vested over the course of time, you want to make your research to know what's the plan on how to bring this into circulation, and that you can get from the white paper of that project, for example. And you have to do your research very well, because some projects can be scam, and in the sense that some people just brought lithium in circulation so that some people can buy it and bring the price up, and so that they can then bring some more quantity and dump it on you, and that often happens. It's not yeah. So with that said, it should be clear to you that in the fundamental analysis of any crypto project, the three main factors or parameters that are important to you are the price of the commodity or the token or the coin, on the market cap, and then the circulating supply. So I'm going to zoom in on the circulating supply and explain to you the major things you should pay close attention to when analyzing this circulating supply part of the parameters. And before then, you should understand that apart from the circulating supply, there is another kind of type of supply, the total supply and the maximum supply. They are two different parameters. There are some projects that have maximum supply, like Bitcoin, for example. The maximum supply there can never be is 20 million units of Bitcoin. Okay, while there are some other projects like Ethereum, it doesn't have a maximum supply. It more and more will be coming into circulation over time. Okay, so it doesn't have a maximum supply. Why? Even though it doesn't have a maximum supply, there's a total supply present. Some of them might not be in circulations. I mean, some of them might not be on the exchanges, but some of them might be kept on quotes or some storage that are not available on the exchange, while some of them are on the exchange. So the part of the total supply that are available presently that are then on the exchanges, what we call the circulating supply. So we can have one scenario where a particular project has a maximum supply, and then the maximum supply is equal to the total supply, meaning every possible unit that could ever be available is already available presently, and the total amounts the total supply is already in circulation. That's usually a rare situation, but it happens. For example, in the case of Theta. Theta is different from Theta USDT. Theta, the live streaming projects which I mentioned in one of the past videos, for example, has a total supply of 1 billion, which is also equal to the maximum supply 1 billion, and then everything is in circulation. That's one of the best. I think that's actually the best kind of token economics you could have. Not every coin or token or every project has this kind of parameter, but I often love this kind of situation where I don't have to be on the lookout for what happens to the circulating supply. I know the whole maximum supply is in circulation, everything is available, so there's no instance of more are going to be put in circulation later. So it gives us some more confidence, and all your attention is focused on the market cap. As the market cap increases, the price is going to increase because you are aware that no more are going to be added into circulation. Okay, but in the case of some other projects where there's no maximum cap on the amount that could be in circulation, you want to be concerned about how do they intend to put the additional ones into circulation. And even in cases where there's a maximum supply, but then not everything is in circulation. Okay, some of them are still locked up somewhere. Some of them, for example, in the case of Bitcoin, is being released to the miners based on the amount of work done, or based on certain conditions that I explained in some previous videos. And some projects just have different parameters through which they intend to put more into circulation, and then you want to check their white paper to find out the white paper. Here you can check their white paper to see the plan on how they intend putting more into circulation. For example, in the case of Ethereum, you have an inflation plan that is way less than 20%, meaning less than 20% is going to be put into circulation every year. It's not as if it's going to just dump into circulation. There's a plan. You can read about it here to see how they plan to bring it to circulation, and then they have a plan to reduce it later, maybe to about 5% or thereabouts. So that way, there is no situation that is such that so much is going to be dumped into circulation. You remember I told you that the price equal to market cap divided by circulating supply. So if there's a situation whereby a massive amount could just be dumped into circulation, maybe it was kept in some cold storage, maybe some wheels kept it somewhere on the exchange and they are not using it, or maybe they kept it somewhere and they just dump it in circulation and sell, is going to the sell pressure is going to cause the price of that particular commodity or entity to dump. So you want to verify to be sure that the total amount is in circulation. If it's not in circulation, the plan as to how the remaining is going to be put into circulation. And among the ones that are even claimed to be in circulation, you want to know how are they distributed among the different wallets. There are some explorers that give you the, you can check the explorer, and then some explorers are not so explicit. Some explorers are not so explicit, but there are some other ones that's why I love the BSC scan. For example, it's so explicit. It gives you an information about the different wallets that are holding different amounts of the particular token or cryptocurrency we're talking about. So I'm not going to go into details about that. If you are in my community, for example, as we do this over and over together, you get to understand how to do this more and more. So you can find out what you need to find out is how this amount in circulation, or some of the total supply that are outstanding, how they're going to be vested, how they're going to be put in circulation over time. and even the ones that are in circulation, how are they distributed among the different wallets? Because if some are concentrated among a few people, those people are on the lookout for when price is going to rise so that they can dump it on some other person. So the improvement in price is going to be so limited, and that's what happens in the case of Doge. For example, Doge has a supply of about 129 billion. Okay, and out of this supply, you have a lot of them concentrated among a few people. So when there is a hype and the price is going up, you see these people just dumping into the market and selling off and cashing out. And that's why, even though Doge is having a very significant market cap, because of the large circulating supply, you see the price is still very low. And this should give you a clue as regards the importance of total supply, because with this 8 billion put into some other projects that are of lower supply, for example, you might have seen the price improving more, but because Doge has very high supply, when you divide this by this, the price is still quite low. So as far as the circulating supply is concerned, pay attention to the total supply, the maximum supply. If there are still outstanding quantities that are not in circulation, how do they plan to vest them? You can get that from their white paper, very importantly, or from some of the other data that they must have released at the when they starting out, from their roadmap and how they intend to put them into circulation. And among the ones that are in circulation, or even the outstanding ones, how are they distributed among different wallets? Are they evenly distributed? The more evenly distributed they are into various wallets, the more advantageous it is. But when too much amount, like 20%, 30%, are concentrated among a few individuals' wallets, then it's a red light. So you want to pay very close attention to that. So assuming you have done your findings and then you realize that all these parameters are favorable, then you want to pay attention then now onto the market cap, and then how the market cap affects the price. So with all of these things I've said, how do they then apply using market cap, for example? Now, when you want to analyze the market cap, like I said earlier, whatsoever kind of forecast would make the market cap increase, all other things being equal, assuming the circulating supply is constant, then it should make the price increase. Now, you must have heard some predictions recently about how Bitcoin may reach $100,000, $200,000. You may think maybe it's just some kind of guess out of thin air. A lot of times it's not actually just a guess out of thin air. It's still a guesswork somehow, but it's some kind of intelligent guesswork. And that's how those kind of predictions are often being made is this. Now, you may one of the ways you do that is compare the projects with an equivalent project, maybe in the blockchain or sometimes in the traditional world. I'm going to use about 3 examples to analyze it. Take for example Bitcoin. Bitcoin currently is serving some of the rules that gold is serving as a store of value, and that's why a lot of people call Bitcoin a digital gold, because it's serving as a store of value, which is what gold is doing in the traditional world. A lot of people are storing their values, they are devaluing currency and storing them into gold, and gold currently has a market cap of about $11 trillion. So many people have been patronizing gold, and right now with this kind of hype and in the crypto space, and a lot of people coming to realize the potentials in Bitcoin, a lot more and more people are coming to see Bitcoin as an alternative to gold. So if, for example, more and more people get to be convinced based on this campaign for global mass adoption, and say 5 trillion, that 50% of the people that had bought into the idea of gold now starts getting convinced about the potential of Bitcoin being able to serve the role as a store of value. If say 50% could be trapped within this year, which is a very Herculean task, but it's possible that 50% of these people, or who actually preferred gold, now starts to prefer Bitcoin. That means we'll be able to trap maybe say about 5 trillion out of this 10 trillion. So if $5 trillion was to flow into Bitcoin alone, for example, assuming everything is going to be flowing to Bitcoin, and assuming none is flowing to every other cryptocurrency, now Bitcoin market cap will go to about that's about 6 trillion, about 6.1 trillion. So with the formula we used earlier, which the price equal to market cap divided by circulating supply, by the time about additional 5 trillion flow into Bitcoin, if an additional 5 trillion flow into Bitcoin, for example, so if an additional 5 trillion should flow into Bitcoin, that means we should be having about 6 trillion or 6.1 trillion divided by say 18.6 or 18.7 million units. So using the Google calculator here, I'm going to just divide 6.1 trillion. Okay, divided by then the circulating supply of Bitcoin should be just about, say, assuming we attain 19 million units, then we should be having the price at about, you know, $321,000. So this is how they often make those predictions. They try to, you know, people try to compare the role of Bitcoin with an equivalent products that render similar service. So Bitcoin is combining the role of gold with a traditional current or a traditional fiat currency, and the current forex market is about $6 trillion, while that of gold is about $10 trillion. So combined is about $16 trillion. So if Bitcoin is serving to, you know, replace gold as an alternative to gold, and then it's also serving to be an alternative to the fiat currency of different nations, and we have a combination of gold and the forex market being about 16 trillion, Bitcoin should be able, in the short term or perhaps in the long term, should be able to trap about 5 trillion in worst case scenario. And if it's able to trap this value, then with this kind of calculation, with it, Bitcoin should be seeing that kind of, you know, price surge. And that's how people actually come with some of these kind of projections. But is it certain that this amount of people are actually going to troop in? You know, nobody knows what the future holds, but you can keep using your intelligence to draw different kind of inferences from the data available to you. So that's one way to use market cap to predict the what the future prospect is likely to be. So in this kind of situation where you have Bitcoin getting to a realm where there is no data, you know, there is no data to reference, because it's getting to a realm where there is no previous data to reference, so to speak. We reference a lot of this data, compare to gold, compare to some past performances and the likes, and then we can predict what is likely to be up ahead in the future. So when you combine this kind of factor with your technical analysis skill, you get a more robust knowledge base on which you base your decisions. And this kind of information is even more important when you are considering new projects that don't have history on the charts. You know, when you have some projects that are coming that are just being launched today, and then there is no chart to show their historical performances, they actually don't have any historical performance, then you are left to these various parameters of market cap and the circulating supply. You can use them, combine that, and then compare this project with some existing projects that have that render similar service, and then you can use that to, you know, make your inferences. Take for example, I don't know, I think I actually hinted on it earlier in one of the videos when I was describing the case of Theta. Theta, for example, is planning to render a live streaming service on the blockchain, just like YouTube offers in the traditional centralized platforms. So if Theta is planning to do something similar to YouTube, assume Theta was going to be the only project doing this on the blockchain. Meanwhile, it's not the only project. LivePeer is doing something similar. AIOZ, for example, is a new project that is doing something similar. So this there's competition already in the blockchain, so they are going to, you know, share whatever come into the space regarding live streaming. So if assuming Theta was going to be the only project that will be rendering this kind of service, then you may want to consider compare Theta to YouTube and say, okay, what's the current market cap of YouTube, for example? YouTube currently has a market cap, I think, of about 100, I think over 170 billion, dollars. So YouTube has, I think as of 2020, okay, YouTube has had a market cap of about 170 billion. So, and then we have a project like Theta that will be rendering the same kind of rendering similar service, and then similar service to YouTube. And then Theta currently has a market cap of about 12 billion. The network is quite bad now. So Theta currently has a market cap of about 12 billion, and then with a maximum supply of 1 billion. That's why the price of Theta is just about $12. But assuming Theta was going to succeed so well, you know, with the right team and then with the right marketing, they're able to trap, say, up to 70 billion people of those that patronize YouTube, and then they're able to get them on board on their project. Then Theta will be, we should expect the price of Theta to go somewhere around, for example, if it's able to trap 10 billion, which is a very large figure, It's not something that is easily achieved, but it can be achieved in this bull market. So with 70 billion divided by the maximum supply of 1 billion, Theta may experience a price of $70, for example. $70, and $70 from here is almost about times 6% movement. With the current price of $12, Theta is currently about $12, and then the current market cap is about 12 point something billion, and with a maximum supply of 1 billion, if Theta is able to trap say 7 billion out of the amount of people that patronize YouTube, Theta should be able to experience a surge up to a price of 70 billion. I hope I did that calculation right. So let me 70 divided by 1 billion. Yeah, it's $70. So we should have about times 6. So and I believe that as long as this bull market persists and a lot of people become more confident about the crypto space, more funds are going to flow into the crypto space, and people are going to look in the way people who love live streaming and love their freedom, and they may want to patronize Theta, and then we can have that amount of people actually patronize Theta. And I won't be surprised to see Theta before the end of the year or sometime early next year approaching a price of as high as $70 and even much more, because the chance of growth is still so much. So for a new project like this, where you don't have sufficient data on the charts to make your decisions, you are left with all these fundamental parameters to make your judgments, and you can actually make more informed decisions with all these parameters. But even with established projects, combine your knowledge of charting with this fundamental with the knowledge of these fundamental parameters, you still at a better advantage than somebody who all he knows or all she knows is technical analysis and has no knowledge about this. So I'm just going to use the last example regarding comparing a project with an existing project. See, Cardano, Polkadot, for example. Polkadot, like I said, was founded by one of the founders of Ethereum, and is hoping to do the same thing that Ethereum does, providing a smart contract platform, just like Cardano also planning to provide a smart contract platform. They want to do it at a lower cost, and then Polkadot is going ahead to make its platform interoperable with different blockchain, which is one of the limitations of Ethereum. So with this kind of plan, Polkadot should be able to get the same kind of people that had interest in Ethereum because they believe in what Ethereum does. They should start having some interest in Polkadot. Why Polkadot may not be able to flip Ethereum, even though it has something that looks like a better plan than Ethereum? Why it might not be able to flip it? Because Ethereum is already a giant in the space, and there is a lot of trust already built around it. So even if you are coming with a project that has more advantages than it, you may not be able to flip it so easily because there is already trust built around it. So there's a lot of work to be done by Polkadot. But then we know that if the team do their job very well, and then they have a good marketing, and then they market well, and they have good improvement plans, and that's why you should also pay attention. I think I missed that out, which is the roadmap of any project. So what they plan to do in the future, maybe what they plan to do in the next 6 months, in the next 1 year, and see how this improvement plans is going to attract more attention, and more people might get more interested in the plan. Like Cardano is planning to make its blockchain, an NFT marketplace, to where different NFT projects can also build their projects on the Cardano blockchain. That's going to attract more people to the Cardano blockchain, and Cardano being the token of that ecosystem is going to appreciate, because there's going to be more demand for it as they patronize the service. So more people are going to buy Cardano, more funds are going to flow into Cardano. As the market cap increase, then the price is going to increase. So with Polkadot, for example, we have a circulating supply of 926 plus billion. Okay, that's million, almost a billion, and then the total supply of about 1 point something billion, and then maximum supply is not available. It's likely that Polkadot actually has the same kind of plan like Ethereum, where you don't, because the founders are similar. So the market cap, there might not be a maximum supply, but they should have a plan on how to invest more and more, which will be a fair plan, and how to put more into circulation over time. So if this total supply is going to remain for the next 1 year, for example, or so years, and Polkadot is able to trap, like I said, Ethereum currently has a market cap of about 240 billion, and Polkadot is still so far away at a market cap of about $38 billion. It's still highly undervalued in my opinion, because Polkadot does, it makes up for a lot of the weakness that Ethereum has. So there should be more patronage to it now, more than it is having. So if it's able to trap alongside, Cardano is able to trap say a billion, 100 billion, and then Polkadot is able to trap 100 billion. And like I said, the amount of people that eventually patronize Polkadot don't have to move away from Ethereum. People can invest in Ethereum and also invest in Polkadot. So what I'm saying is, if people patronize it, that much funds flow into Ethereum, the same people who are still working, who are still earning more money, may still be able to develop the amount of trust they built in Ethereum, and also a lot of them may want to put their funds into Polkadot too. So if Polkadot is able to attract say half of the percentage of trust built in Ethereum to itself, meaning Polkadot will be having a kind of market cap that is about say 110 billion market cap, and that is possible even within this year, maybe early next year. So at a market cap of about 100 billion, if it improves to say 100 billion, and a circulating supply of about 926 million Polkadot, we should see the price of Polkadot rising to say, okay, assuming it rises to 110 billion divided by the circulating supply, assuming the circulating supply then is just say 1 billion, then Polkadot price is expected to be around say 110 divided by the current price of say of $41. So Polkadot may experience about times 2.5 or 2.6 increments. So this is how you combine your knowledge of technical analysis with fundamental analysis. So with all these kind of parameters, you should be able to make more informed decisions as regards the future projections of prices regarding the project that you're analyzing. And one thing you should also pay attention to, and the one thing this would help you achieve is, sometimes people just call different prices, or if a particular coin is still at just $0.01, meaning it's about just 1 cent, then if Polkadot is already $40, then we should be seeing it's also at $40. Just like some people may be expecting Cardano to rise to a height of say $50 within this year. It's possible, but it's so difficult, because I hope the network is not going to give me some problem now. So while we have Polkadot having a supply of about 1 billion, Cardano has a supply in the multi-billions. Okay, so even with the same market cap as Polkadot, Cardano will still be having lower price than Polkadot, because Polkadot has lower supply.